Hey, Anthony Pietrobono here, back with another finance video. In today's video, we're going to talk about the top 3 potential growth companies to watch during the month of August and go ahead and possibly invest in. Before we get started, I'm going to share my portfolio update. If you appreciate the transparency and me showing you exactly everything I do with my own portfolio, I would really appreciate for you to give me a thumbs up. It really helps the channel grow. Thank you. If you're interested in accelerating your wealth building process by investing in stocks, then consider subscribing. We're currently at an all-time high in the public account at $675,247, up 430% on the year. For the quarter, we are up 125%. May 20th, we were at 301,973. For the month, we're up 12%. We were at 602,000. That was our previous high, July 20th. Now we skyrocketed recently. The first company we're going to take a look at is Square, ticker symbol SQ. Square was founded in 2009 by Jack Dorsey and Jim McKelvey. Jack Dorsey is also the founder of Twitter. Square is a direct competitor to PayPal, and they deal with the mobile payments and the online payment solutions to provide an alternative for online payment processing as opposed to PayPal and other services. What some people don't know is that Square was started by using that little adapter that you attach on the phone. I don't know, you guys probably remember this, but you could put a little adapter to process credit cards and payments on your own cell phone. So you could basically have your own terminal to process credit cards and take payments, but just by having this Square that you would insert into your phone. In my opinion, the next big thing that's been really popping off for the company has been Cash App. And Cash App allows person-to-person money transfers through the app or the website, and it makes it really easy for people to pay each other or make transactions from person to person. Someone buys something, someone sells something. It makes it really easy and simple for people to trade products and services. Now, if you take a look at the revenue growth from 2012, we see it was 203 million, 500 million, 850, 1.2 billion, 1.7 billion, 2.2 billion, and then 3.3 billion in 2018, and continuing to grow. We see net income is negative every single year, but the point is we're seeing revenue grow at a very fast rate, around 40% per year, upwards of 50% per year in the recent years. This is the type of growth in revenue we want to look for when we're looking for growth companies. We want to see these jumps and increases in 40 or 50% growth year over year. And then we also want to take a look at the balance sheet and the income statement, go one layer deeper and see how they're spending their money to see if the growth is justified, and then also take a look at what they have planned upcoming to see if we believe that they're going to continue to capture market share down the road. Here's a real quick breakdown of the income statement. We can see each year the total revenue, cost of revenue, gross profit, operating expenses, operating income. Here's one thing that's great to look at. Take a look at the operating income. Based on factoring in all of operating expenses, what it costs them to run the company, the employees, everything combined. After you factor in those expenses, they gained a profit of 26.5 million when you factor in the revenue over the operating expenses. Another thing to look at here is the trend each year of gross profit. So we see gross profit increasing, and then we see operating expenses increasing because they're putting more money into growth. Then we see that the trend is getting a lot better, less negative each year for operating income. And then we see 2019 actually being net positive of 26 million. The next question you're going to ask yourself is, what kind of moat do they have? What separates them? And what is going to ensure, or at least what can allow us to feel confident in the future growth of the company? Well, that's where we look back to my previous videos on taking a look at the leader and all the other things we're going to take a look at to make sure that we are confident in the company's ability to grow at whatever rate we would like to see the company grow at. All we do is you go ahead and research those things I mentioned in the previous video. So if you haven't watched my previous video, go check that one out. I'll put it in the cards up above so you can watch that one now. The second growth company we're watching in August and one to potentially invest in for yourself is going to be Tesla. You knew I was going to mention Tesla. So I'll go into this briefly. I talked about Tesla too many times. We have the stock split that's going into effect August 21st, meaning that it will actually be split on the 31st, which is the Monday, end of the month, the last day. That's when we'll see the stock divided by 5. There's a lot of buying going into it. The next catalyst coming up is September 22nd, which is Battery Day, and that will further push the stock up because of the news that they're going to be releasing there. Then we have earnings coming out the following month, which will be their best quarter ever. Again, expecting the stock to possibly be pushed up more then, and we have the other years down the road. So in my opinion, this company is still undervalued for what is coming in the future. Again, I made a video on Tesla where I see a minimum of 5,600 as a stock price. This is before the split. If you want to go by after split price, then I am essentially saying that I am seeing the stock being at least over $1,100 by 2025. So over $1,100 by 2025 after the split, and that is with a growth rate of 40 to 50% per year. If you believe a growth rate of 40 to 50% per year is great, then you would potentially invest in Tesla. I'm not going to go into the details of why. I've made too many videos in the past, so you can check out my videos on Tesla. Just one to watch. If we see any dips, I would buy the dips as you go and continue to average in on every red day. One thing that could potentially explode the stock a little bit farther, a couple $100 from here, would be the S&P 500 inclusion announcement, but we don't know exactly when that's going to be. That's why for now, I would suggest averaging in and buying in on red days if you're going to choose Tesla as an investment. The third stock to watch is going to be Apple. Apple is the largest company in the world, approaching that $2 trillion market cap, sitting at $1.97 trillion. The biggest two reasons behind investing in Apple is for 5G coming online and the great leadership of Tim Cook. In my opinion, Tim Cook has done a phenomenal job at continuing to grow the company and take control of everything that's happening with the company after Steve Jobs left. A lot of people thought that Apple would be done after Steve Jobs left, but Tim Cook has done a great job at continuing to manage the company. The one thing I would say is that the valuation is quite high. It could be a little overstretched. So again, I would look for red days and I would buy in a portion of however much you wanted to allocate into the company on each red day. So as an example, if you wanted to buy $10,000 worth of Apple on a red day, you could put 2,000 in. So 20% at a time. The risk reward is kind of skewed because obviously it's at an all-time high essentially right now. However, I don't see a major correction happening with the company. So if you are a long-term investor, you're planning on holding for 3, 5, 10 years, I don't see any issues with buying at the current prices. But remember, none of this is financial advice. I'm just saying exactly what I would do, and this is all for educational purposes only. Another tip when you're looking to research companies, Yahoo Finance is actually a great resource for taking a look at the balance sheets and income statements. You can search those up very quickly for any company. A second website that I use quite a bit for investing is seekingalpha.com. Great resource for learning about the market's latest news and strategies on potential upcoming investments. One thing I absolutely love about Apple is their $100 billion in cash on hand. So last year they had $100 billion. There was a decrease. Now they have $93 billion cash on hand due to coronavirus. Total assets had a decline year over year as well, but still sitting at $317 billion. And current liabilities as of June 30th, 2020 are sitting at $245 billion. We're looking at a healthy relationship with assets to liabilities and cash on hand. This gives us confidence in being able to weather any storm. The only next question you ask yourself is, do you see Apple growing at the desired rate that you are looking to invest in companies that are growing at? So if you have a minimum 40% growth rate you're looking at, then you're gonna ask yourself, can Apple grow 40% year over year for the next 3 to 5 years? And do research based on the past video I posted. Then you'll be able to come to a conclusion and decide on whether you believe that. And if you're confident in that, you will go ahead and choose to invest or not. Those are the top 3 stocks to watch for August. And here's a bonus one. If you're looking for an ETF, I would highly suggest looking into the ARK Innovation ETF, ARKK. I am a massive fan of ARK in general, and this fund is my favorite by far. The management fee is 0.75%. We're looking at the last year, 66% growth, last 3 years averaging 41.7% growth, last 5 years averaging 32% per year growth. Top 10 holdings being Tesla, Invitae, Square, CRISPR, Roku, 2U, Illumina, Protolabs, Zillow, and Lending Tree. What I would do if I were you is I would search up these top 10 companies, look at all the metrics and see if there are companies you believe in and companies you see the growth potential in. If you do, then I would suggest looking further into ARK Invest, researching Kathy Wood and the top people in management, and deciding on whether you will invest in this ETF or not. In my opinion, this is a great, innovative, diversified ETF, and the best one at that. That's going to conclude today's video. Let me know in the comments below, which companies are you looking at potentially adding to your position or adding a new position in? Thanks for watching. Give this video a thumbs up if you appreciated the video. Subscribe for more portfolio updates just like this one and stock investing tips, and I'll see you in the next video.